Welcome to my series of video tutorials on how to prepare Form 990-EZ information return for small tax-exempt organizations. I'm David McCree. I'm a CPA, and you can find me on the web at myform990ez.com. Okay, we are going to talk about the balance sheet on Form 990-EZ and how this works. As you can see, the balance sheet is very abbreviated on the 990-EZ. It's at the top of page 2. You have cash, savings and investments. You have land and buildings, other assets, total liabilities, and net assets on line 27. And that's it. That's the balance sheet. It's a rather odd arrangement. So the first thing we're going to do is just kind of set up the parameters for today. I'm going to assume that this balance sheet is the very first tax return that the organization has filed. In other words, it was just formed. This is the year it was formed in. And with an organization that has just been formed, or its first year, its first tax return, your beginning of the year balances are all going to be zero. Okay, they're all going to be zero. Now, this is not the case if you've been in business for a year or two or more and you've been filing 990Ns, the electronic postcard, and this is the first actual 990EZ you've been required to file. In that case, you will have a beginning of the year balance from previous years, assuming that you've been having income and expenses and you have a bank account. But this assumes that this is actually the first year of operations. Okay, so you're always going to have zeros in your beginning balance sheet. Now I know some people say, well, our balance sheet, we started out with $5,000. We got a contribution of $5,000. That may be true, but when you opened your bank account, it had zero in it until you put the $5,000 in it. Okay, so that $5,000 will show up, but the beginning of the year balance is still zero. Okay. So, having said all that, let's get to it. Cash, savings, and investments, what's going to go there? Well, this is going to be at the end of the year. Okay, so we're talking about column B here. This is going to be the cash that you have at the end of the year, on December 31st, if that's your year end, and that I am assuming that for purposes of this for this example. Okay, so cash, CDs, savings accounts, money market funds, going to go here on line 22. Line 23, land and buildings. Well, that's what it says, land and buildings, and most organizations that are filing Form 990-EZ probably not going to have anything on this line. Other assets, well, that's going to be pretty much any other kind of asset you have other than land and building. You just lump it all onto line 24. And then you add it all up here on line 25, total assets, then total liabilities. That's going to be where all of your liabilities are going to go on line 26, whether that's credit card balances, notes payable, loans payable, mortgages, deferred revenue. Any of those things are going to go there. And then finally, net assets. Net assets are fund balances on line 27. We'll talk more about that later. You also notice that if you have an entry on line 24, you're going to need to describe on Schedule O what's on that line. And the same thing for line 26, total liabilities. You're going to need to describe what those liabilities are on Schedule O. And you'll also need to check this box to show that you do have explanations on Schedule O. Now, before we go any further, I want to talk for just a minute about line 23, land and buildings, and line 24, other assets. It's a rather odd thing that they only have land and buildings on line 23. Usually, you have your depreciable assets on one line: land, buildings, equipment, property, plant, and equipment, that type of thing. And then other assets would be assets that you tend not to depreciate, like inventory or something like that. Intangible assets. However, if we turn to the instructions, you can see that line 23, land and buildings, it says enter the book value, cost or other basis less accumulated depreciation of all land and buildings owned by the organization and not held for investment. So most small organizations don't have land and buildings, but they do have computers, they have desks, they have office equipment, they may have a vehicle. So the question is, where does that go? Well, convention would have it that it would go on line 23 with land and buildings, but line 23 confines you only to land and buildings. So let's look down in other assets. What goes on this line? It says enter total of other assets such as accounts receivable, inventories, prepaid expenses, and the organization's share of assets in any joint ventures, limited liability companies, and other entities treated as a partnership for federal tax purposes. Okay, well that's a bunch of weird stuff that you're not going to encounter too much with a small organization filing 990EZ. It can happen, but it's not common. So basically we're looking at accounts receivable, inventories, and prepaid expenses. Doesn't say anything about computers and office equipment, so they kind of leave you hanging. So where does it go? Well, I'm going to say it probably goes on line 24, other assets, okay, because they are very specific here on line 23 that this should be land and buildings. All right. It isn't clear, and it would seem to me that if the IRS cared where you put it, they would tell you where to put it, but they don't. So you just have to kind of figure it out. I find it rather bizarre, but that's the way it is. So if you put your computers and printers and things on land and buildings, are you going to get a penalty or something? No, you're not. It's not going to be a big deal. All right, but most likely it's going to go down here on line 24, other assets. Okay, I just wanted to discuss that in the video. So I've put together this little model balance sheet. This is the Do Good Charity balance sheet 12/31/2014. And this is kind of what a balance sheet looks like, maybe on a spreadsheet or accounting software or something. Very, very simple balance sheet. Okay, so there are a couple of sections in the balance sheet. The first one here, this is the assets section. Assets are what you own. That's the stuff you own. Your bank account, your equipment, your vehicles, your land, your building, any of that. Accounts receivable, inventories. Right? Liabilities, that's what you owe someone else. Okay, it could be a credit card balance or a loan, a mortgage, something like that. All right. Usually, here your liabilities show how you paid for your assets up here. Then we have net assets down here. Net assets is just what's left over after you subtract your total liabilities from your total assets. So in other words, if you liquidated the business, the charity, what you have left over would be your net assets. Then at the bottom here we have liabilities plus net assets, and this is just part of the double entry bookkeeping formula. Okay, so we know that we're in balance. You see this green line here and this green line here, total assets, they always have to be the same. They have to equal. That way we know that our debits are equal to our credits, and we are in balance. In other words, we haven't left out any transactions. Okay. So let's have a look at how this thing works. All right. So let's say that during the year we had income and expenses that left us with $10,000 in cash in our bank account at the end of the year. So we see we have $10,000 in cash. That our total assets are $10,000, and then we see we have no liabilities. Our net assets are $10,000. Okay, we take our total assets minus total liabilities, and that's $10,000. Okay, and we're in balance because our liabilities plus our net assets equals total assets. Now, let's say that also during the year we needed a computer, so we went and we spent $2,000 cash on a computer. Okay, so $2,000, our computer now appears on the balance sheet, and of course our cash drops to $8,000. So now we can see we still have $10,000 in assets because we just traded cash for a computer. We just converted cash into a computer. All right. So $10,000 in assets, no liabilities still. Our net assets are $10,000. Let's now say that we're going to purchase a printer. Okay. So, but we don't want to spend our cash, so we're going to take out a credit card. Okay, and we're going to buy a printer for $500 on a credit card. So now we've got a printer for $500. So now our asset here is going to go up to $2,500. But now we have a liability we owe on a credit card. Okay, so now our assets have increased to $10,500. We now have a credit card of $500. Total liabilities of $500. Our net assets are still $10,000 because you can see that $10,500 minus $500 equals $10,000. So now we have to see, what does this look like when it's transferred onto the tax return balance sheet? Okay, so for our cash, we had $8,000 at the end of the year. We didn't have any land and buildings. We had other assets. Okay, we had the computer and the printer. That was $2,500. So our total assets were $10,500. Our total liabilities were $500, right? That's what we owed on our credit card. And our net assets are $10,000. So you can see here that as a check, our net assets of $10,000 plus total liabilities of $500 equals total assets $10,500, just like what we saw on the balance sheet. Net assets $10,000. Now we also need to, because we have an entry on other assets and we have an entry on total liabilities, we're going to need to explain those in Schedule O. And let's just take a quick look at Schedule O. So Schedule O is essentially a blank form, and that's where we add explanations. So we're going to put our name of our organization here. It's a do-good charity. We're going to put our employer identification number here. All the pages on the tax return need to have those on there in case they drop it and have to pull it back together and figure out which return it goes to. All right. So all we're going to do is we're going to say, what does this description apply to? It applies to Form 990EZ, page 2, line 24, other assets. Okay. So we have our computer for $2,000. Right. We have our laser printer for $500. That was the $2,500. Okay. And one thing we didn't talk about was depreciation, and that's beyond the scope of this video. But if you're taking depreciation on your assets, it would also go here as well. So I just made up a number here, accumulated depreciation $600, just so you can see how it would be entered on Schedule O. All right, and then also for the liabilities, here we go, Form 990EZ, page 2, line 26, liabilities, and there we have our credit card balance. Okay, so that is the description that we need on Schedule O. One thing I do want to point out to you about the balance sheet is that if you'll notice right here, net assets or fund balances must agree with line 21. And what you'll see, line 21 is right above here. It's on it's up here on page 1. Okay, that's your net assets or fund balances. So if line 27 on the balance sheet, net assets is $10,000, then line 21 on page 1, that also needs to be $10,000. If those two are not equal, then you have a little problem that you need to figure out. There's some adjustment, or you missed some income and expense items, or your bank balance is wrong, or something, okay, which is also beyond the scope of this particular video. But this is an important check, okay? You need to check that always and make sure that those two numbers are the same. If they're not, you're not finished. You need to figure that out. So let's talk about the following year's return. Next year, what is the balance sheet going to look like? Well, the easy part is filling in the beginning of the year balance, because all you're going to do is you're going to transfer column B over to column A. Okay? So you're going to have $8,000 here. You're going to have your $2,500 goes here. Your total assets, $10,500, go here. Your $500 credit card balance goes there. And your $10,000 net assets goes there. And then you will zero these out in preparation for the end of the year balances. So what can we say about the end of the year balances in the following year? Well, we know cash is probably going to be different because that's going to be affected by your income and your expenses in the next year. Okay, your other assets is probably going to be different because you may have purchased some additional equipment. You may have some accumulated depreciation in there. Okay, so your total assets will likely be different. You probably will have either charged more on your credit card or you will have paid off part or all of your credit card. So your total liabilities are going to be different. You may also have taken on some liabilities, additional liabilities. And your net assets most likely are going to be different based on whether you had a net profit or a net loss. So that's a look at the balance sheet, and hopefully that has helped you see what a balance sheet is all about. However, what I haven't shown you is how to create a balance sheet. Okay, so for instance, if you're not using QuickBooks or something like that that keeps a balance sheet for you, if you're just keeping a check register maybe in Quicken or on a spreadsheet or something like that, how do you create a balance sheet out of a checkbook and bank statements and various other receipts? Well, you can do it, and I'm going to show you how in another video. So actually that'll be the next video in the series about how to create a balance sheet from scratch, and I'm sure that you will want to watch that. Thanks for watching, and good luck. Thanks for watching my video tutorial. If you need more help, you can find me on the web at myform990ez.com.